Todd, you recently had the unique opportunity to interview a member of the executive team of a smaller biotech that really over the past few years has caught a tremendous amount of attention from biotech investors. And that company is GenFit. That ticker symbol is GNFT. GenFit, best known for its late stage phase 3 candidate, elafibranor, which is being studied in a disease called NASH. And Todd, really, NASH is quickly becoming the target that many biotechs are striving to hit.
Right. Gilead Sciences' success in hepatitis C, ranking at about $20 billion annualized at one point after they came up with their new hepatitis C drugs earlier. I think it was 2014 they launched the first one, really got the attention of researchers who looked at it and said, geez, what else can we tackle in liver disease? And, NASH is now fast becoming, instead of hepatitis C, the major cause of liver transplant. It's also, when you have liver disease, there's also the risk of liver cancers. So a lot of people are looking at NASH and saying, okay, if we can find a way to tackle this disease, then maybe we can find the next mega blockbuster indication. I, like you said, had the privilege of being able to go down to the Cambridge offices of GenFit. They are a European company. Their primary exchange is in Paris, so they're a French company. But they do have ADRs that trade here in the U.S. They're a little liquid, though, so investors should know that. It's a relatively small company. I think their market cap's around $800 million, and they're far from the only competitors who are, angling to try and, come up with a win in NASH. But they are one of the few that has an ongoing phase 3 trial underway that's expected to read out data in 2019. If the data is good, then they could file this drug for FDA approval. And, there are no drugs right now that are approved specifically for NASH. So, estimates right now are that you'll see about 35 up to, I mean, these are the pie in the sky estimates, right, Shannon? But up to $35 billion market once these drugs get out there. But of course, they're going to have to prove their worth in the trials first.
Exactly. And what's interesting about GenFit is they've actually got kind of multiple shots on goal here. You mentioned Gilead. They've got a few drugs in the pipeline also going after this indication. But GenFit is actually a little bit different. They obviously have a therapeutic component, elafibranor, but also, too, what's really interesting is they also have a diagnostic tool that really, irregardless of which treatment a patient may go with, being able to diagnose these patients earlier, sooner, I think is a key area to win. And so, Todd, tell us a little bit more about their strategy here. How are they expecting to upend this huge unmet need market?
I was fascinated by this, really, the potential for the diagnostic, because I hadn't been thinking that way. Like a lot of people, I've been looking at it and saying, okay, NASH typically occurs in, people who are living sedentary lifestyles. So as Western diets have become more prevalent globally, you see more and more people are getting diagnosed with fatty liver disease and unfortunately NASH. I started thinking, you start spending most of your time thinking not about, how you diagnose those patients, but instead thinking about how you're going to treat those patients. And I think that this gives GenFit a kind of a competitive advantage over some of these other companies like Gilead and everything that are focusing on the drugs, but haven't spent as much time, if you will, in trying to figure out the diagnostic side of it. And the reason I say that, Shannon, is that NASH is a silent disease, and it's often not diagnosed until people really have advanced liver disease. The gold standard for diagnosis is a liver biopsy, and liver biopsies are expensive, they're invasive, and they're usually done by specialists. Okay, this is not a test you're getting done by your primary care physician. So what GenFit has gone out and done is it's been able to identify some biomarkers that show up in the blood of NASH patients. And the idea here is to be able to create a low-cost, easy-to-take test, blood test, that would show you whether or not you're likely to have NASH. Then, if you are, then, theoretically you move on to a biopsy or something else. Next year, they're going to roll this diagnostic test out into different research facilities. And in theory, this is a drug agnostic approach, diagnostic. Okay, so it's not just going to be used with GenFit's drug that's in phase 3 trials. It could be used with Gilead's drug. It could be used with Intercept's drug. It could be used with Madrigal's drug. It could be used with Viking's drug. All these companies that are racing towards the finish line in NASH could theoretically drive demand for diagnostics beyond that specialty doctor market, specialty office market.
Yeah, and looking ahead, I think it's really interesting. So phase 2 for GenFit's drug, elafibranor, actually didn't meet its primary endpoint. And there was some nuance there. And I think this is an important point, especially for biotech investors. The company did a post hoc analysis. We've talked a little bit about kind of the problems with that. But there was some nuance here because it really came down to study design, which it sounds like for this phase 3 trial that they're currently running, they've really designed it with that in mind, Todd. So tell me, I guess, looking forward, what are some of the key things that you'll be looking at with this phase 3 trial with that in mind?
Yeah, I think that we always have to be very cautious when it comes to post hoc analysis. But we also should remember that this is a indication that there are no approved treatments specifically for it. So phase 1 and phase 2 truly are much more exploratory than maybe it would be in other more proven out indications. And each one of these companies is targeting a slightly different mechanism of action. So for example, GenFit's targeting, it's a dual agonist of the PPR, all right, which is a pathway that helps to regulate things like the metabolism and lower the amount of fat that's in the bloodstream. So their drug is a dual PPR, AR. But you also have Intercept that has an FXR agonist, which works slightly differently. You have Gilead's selonsertib, that's a different drug, works a little bit differently as well. So all of these companies are kind of got these different drugs that are going through trials, and they're using these phase 2 trials to try and figure out, okay, what is the best way to get this drug across the finish line in phase 3? So it truly is exploratory. So in that regard, maybe I'm willing to give a little bit of a benefit of the doubt to the post hoc analysis because, in speaking with management, it does sound like they have a really good grasp of the type of patients that are most likely to respond well to this drug. We'll have to wait and see. Right, the interim data that could back a FDA approval, that's not expected until the end of 2019. But that's less than a year away, or almost about a year away. So you're not waiting too long to find out whether or not they're onto something. Intercept and Gilead, interestingly, Shannon, their data is going to come out first. They'll have data in the first half of 2019, but Gilead is actually not even looking at NASH resolution as the primary endpoint in their phase 3 study. They're actually looking at improvement in resolution of fibrosis. So, it really may come down to which ones do you use in different levels of treatment, or do you use these because they all have mechanisms of action that are slightly different? Do you use them as combination therapies? How that's all going to shake out, I don't know. So yeah, take it with a little bit of a grain of salt because, phase 3 is based on post hoc analysis. Phase 2 maybe isn't that indicative overall of what's going to happen in phase 3.
Yeah, and it'll be important too to watch also a phase 2 study in another chronic liver disease indication, PBC, which is really marked by progressive destruction of bile ducts within the liver. The read-through from that phase 2 study will obviously have implications from an investor perspective on what that means for the drug as well. And then too, Todd, you've got to be mindful of cash burn as well because the company may need to do a capital raise pretty soon.
I think so. I mean, yes, the PBC data, that's expected later on this year. Intercept already has their drug that they're studying NASH approved in PBC. That's generating out about $43 million a quarter for Intercept. So you are talking about 9-figure opportunity, I guess, if you will. They will need to conduct a phase 3 study, but if the phase 2 data is good in PBC for GenFit, then maybe that helps validate the mechanism of action a little bit more. Maybe that causes share prices to rally a little bit. If so, I wouldn't be too shocked if they went out and did a capital raise, issued some shares to try and bolster up the balance sheet. They're certainly not in, this is not desperate times. They've got 275 million using current exchange rates, euros to dollars right now on the books. But they are going to have to increase their spending unless they do a licensing deal or something. They're going to have to bolster their cash through some other way if they're going to launch this on their own.
Yeah, such an interesting space. So much to watch here, Todd, in this particular company with GenFit. It's really companies like these that keep me so intrigued in the biopharma market. And really, we should come back and just do a NASH show. There's so much more we can dig into, really about the race to approval and really how they differ and how they're similar. We'll have to put that on the calendars, Todd.